Thanks, Eric. This is my first time at the Chicago show. It's been very interesting. The panel discussions have been very enlightening. Moving to start with the cautionary note. A lot of presenters skip over this, but I think you should know about this. We're a junior mining company, and junior mining is like NASCAR driving. It's you better know what you're doing. It's very, very fast, very risky, and if you don't know what you're doing, you're going to get hurt. So as investors, you should know that. As junior mining companies, we face a lot of risks, and although we plan to do these things that we say we're going to do, sometimes we're just not able because of mitigating factors. This company is run by myself. I'm a geologist. I've been in the industry virtually my whole life. My father was a prospector in the Yukon Territory, which is right up by Alaska. My brother's a lawyer, but he started out in the business as well as a cheap labor for my prospecting father. Ingrid Martin, she's our CFO. She serves on a number of the CFO for a number of companies. Very competent woman based in Montreal. And then we have a great board of directors. The other gentlemen there are all independents. Peter Tersch is a geologist based in Vancouver. Vaughn's a partner in a senior law firm in Toronto. Fred's my original partner when we started the company, a prospector based in Ontario. And the most recent addition to our board is Zach Dingsdale. He gave a presentation earlier. And what Zach brings to the mix is his experience in the investor relations market. We've got a very tight share structure here. On a fully diluted basis, we have 27 million shares out there. You can see that our incentive options and warrants are respectable. Some of the junior mining companies, it's incredible how many options and warrants they issue. We're quite proud of the fact that we've maintained this tight share structure over a number of years. As insiders, we control about 6%. Our market cap, this is an important number. The book value of this company right now is over $3.5 million. We're getting really beat up in the market along with most of the junior mining companies. So we have a market cap that's below our book value. And this is just right there, there's built-in value. We're currently trading at all-time lows of 6 cents. We've been as high as 34 cents over the last 52-month period. We trade quite well. Our average volume is about 176,000 shares per day. For a small company like ourselves, it is tough to raise money right now. The markets are not very friendly, and what we try and do as a company is we try and leverage every dollar that we raise. We leverage that to make the most out of it, so that we can. We don't have to go to the market all the time. We look for what we're focused on is the Abitibi Greenstone Belt, and this is a fantastic place to work. It's historically it's one of the best mining jurisdictions in the world. It's principally seen as a gold mining district. Historical production of over 161 million ounces. Annual production from ongoing operations is close to 2 million ounces per year. It's also known for its copper production, over 18 billion pounds. Zinc and silver are also well-known commodities that have been exploited in the past in the Abitibi. This map just gives you an overview of the Abitibi region. Abitibi is a geological province, but it's also a geographical region. Starting here in the east, we have Timmins. Timmins has produced over 65 million ounces. It's also well known for the Kidd Creek deposit, world-class zinc and copper. As we move across, we come to Kirkland Lake here. Very high grade, famous district. 24 million ounces of gold and still producing. Rouyn-Noranda, seen principally as a copper producing area. But you can see that the gold numbers are over 10 million ounces. Bousquet-Cadillac, I'm going to talk, or the Cadillac-Bousquet area, I'm going to talk more about that in one of our projects, but their gold there is unusual. It's not your typical gold in quartz veins. The gold is tied up with massive sulfides. And like I said, we'll talk more about that later when we get to our projects. And then Val-d'Or, that's the town where I live. Val-d'Or in French means Valley of Gold. and very good production statistics there as well. And then finally up here to Chibougamau, which has been known as a copper producer, but always known secondarily as a good gold producer as well. We're in the midst of a mining boom in Abitibi right now. It's despite what's going on in the markets, on the ground, I've never seen anything like it. It's hard to get geologists, it's hard to get drillers, it's hard to get contractors of any kind, geophysical guys, GIS technicians. There's in the local newspaper, there's 4 to 5 pages of advertisements looking for technical personnel. The mining companies that are there, they're taking their money from cash flow and they're reinvesting that into exploration and development. It's so bad on a personnel basis that they're importing labor from all over the world, really, from West Africa, from South America, other parts of Canada. The Abitibi region sees over $1 billion worth of exploration on an annual basis, and this kind of exploration expenditure, it leads to new discoveries, putting new mines into production and expanding existing resources. It's really quite remarkable what's going on, and it's perplexing to see what's happening on the ground with so much activity and so many new discoveries and so many good drill holes coming out on a weekly basis. The market just isn't picking up on it, and I hope that turns around sooner than later. We're also getting better at looking things. Traditionally, the focus was on high-grade gold veins, but as we get smarter, we have better equipment and new technology, and we're starting to go deeper. We're starting to look at new commodities like rare earth metals, lithium, and graphite. And we're also looking at older deposits that were mined on a high-grade basis, and we're finding that they're economic for large tonnage open pit operations. Good examples of this would be Osisko. Quebec, or the Abitibi spans 2 provinces in Canada, Quebec and Ontario. And we favor Quebec over Ontario for several reasons. It's mining friendly. The permitting process is very sensible. It's very results driven. We do have to go through a permitting process for exploration projects and for development projects, but there's light at the end of the tunnel. You're not stuck in the permitting process for years and years. We have amazing tax incentives. For every dollar we spend on exploration, we can recover up to 43% in cash rebates. And I've put these graphics up here to show you what that 43% cash rebate means. In this top chart here, this is in the first year assuming $1 million equity financing. In the bronze color would be the Quebec, and this would be the rest of Canada. So we raise money in the rest of Canada, and that's it. There's no more money coming back to us. In Quebec, though, we're getting that 43% every year, and that declines. And that's money that we continue to reinvest in exploration. And if you look, and what that means to you as investors is that in the Quebec example, there's assuming for example it's $1 million raised $1 million shares issued. That's all there is over a 4-year period. And but there's money coming in on an ongoing basis that's reinvested in the exploration. Whereas in the rest of Canada, what's happening is you have to continue to go to the market and raise money. So after a 4 or 5 year period, there's only been 1 million shares issued on the Quebec exploration side, but in the rest of Canada, you've issued almost 1.6 million shares. So that's really important in terms of dilution. The other thing about Quebec is the present administration under Jean Charest has come out with the Plan Nord, which means the Northern Plan. And the goal of that plan is to open up northern Quebec to all sorts of industrial development, not just mining, but hydro development and tourism, forestry, everything. And they're really going after this. The Quebec government, they're really giving us a lot of support as an industry. So just to review what's going on in Quebec, we have fantastic infrastructure there. Probably the cheapest place in the world to do exploration. Just as an example, our all-in drill costs are anywhere from $110 a meter to to about 150 a meter, depending on the size of the program and where exactly it's located. You contrast that to other mining districts, Nevada, for example, or in Mexico, or up in Yukon, where I'm also involved. You're looking at all-in drill costs in Mexico of about $250 a meter. In Yukon, Alaska, you're looking at all-in drill costs of $600 and $700 per meter. So again, this idea of leveraging the money that we do have, leveraging that into as much drilling as we can do. I think the best place in the whole world would be the Abitibi. The political policies are very supportive. As I mentioned, the Quebec government has made it a mandate to develop northern Quebec. We have an exceptional workforce in Val-d'Or. We have a fantastic collection of professionals and labor. They work all over the world. There's as many people working in West Africa and South America and northern parts of Canada that actually live in Val-d'Or as there is people that live and work in Val-d'Or. So we export our talent all over the world. Another part of the government strategy is training. A few weeks ago, the Premier Charest was wagging his finger at industry, saying, "For God's sake, leave the kids in high school. Don't take them out too early and put them in the mines, because we need to educate them." So that's there's all kinds of incentives coming, not just for training the labor force, but there's all kinds of money available for research at universities in Quebec and throughout Canada. These are very high-paying jobs. A young fellow that we know just graduated from university. He's a mining engineer. His starting pay is $80,000 per year. He was given an $8,000 bonus, and they also offered to pay his first 6 months of rent in an apartment. So these are very high-paying jobs, and that translates into all kinds of consumer activity within the local economy, and ultimately reinvestment in the region. So I'll move on to our projects now. I put this slide up here because we believe in drilling. We take our projects as quickly as we can to the drilling stage. What we are basically is a project generator. We're a group of geologists and prospectors. We identify areas that we think have good potential. We go out there and we stake the ground, or we do deals with other prospectors in the area to put together property packages. We compile all the data that's available. We come up with a game plan for exploration. We go out there and we do our geophysics or our geochemistry or our prospecting mapping, whatever it takes to get a handle on it. And then we drill it, and if we're successful at that, then we look for a senior partner to take it to the next level. We've been pretty successful at this over the last 10 years. This is important because it's another way that we leverage our money to prevent dilution in the company. If we can get our money from option payments and selling stock that we've acquired through farm outs, we don't have to go to the market and raise money. So that's another important point for investors. We're focused primarily on gold projects in Abitibi. There's two types of exploration models that we go after. The traditional model, it would be the gold and quartz veins. This is kind of this is what you see on the old cowboy movies. They're in there mining these very easily identifiable quartz veins. They're very rich, very high grade, and they're something that are worth going after. But we're more excited about the second type model. It's what we call a volcanic massive sulfide, and it's typically more of a copper zinc type of mineralization. And these things are fantastically rich. They're jewelry boxes. And what we get in Quebec, there's one district called the Laurent-Bousquet. It's produced over 12 million ounces of gold. This deposit, Laurent, this is what made Agnico Eagle. It's tremendously rich. At one point, their cost per ounce to produce gold. What they do is they translate their copper and zinc credits into gold. And at one point, when the price of zinc was at $1.50 per pound, they were producing gold at minus $25 per ounce. So these are incredibly rich deposits. We also have a very good platinum and palladium property that we'll be drilling this year. Initially, we were very strong on the PGs. This is kind of what got the company going. In the early aughts here, the platinum price was very high relative to gold. That ratio's changed a little bit, so it's not so favorable to go after platinum anymore. Lately, we've moved into the rare earth space, and I'll talk about that more later. This is just a graphic showing where our properties are relative to the major deposits. I'm going to start talking about our Fekete property here, and I'm going to kind of move to the west down to our rare earth property here. We do have one property left in Ontario. As you can tell, I much favor Quebec over Ontario as a jurisdiction, and we're actually negotiating to sell the Teck property. That should be done before the end of the end of May, and we'll be focused 100% in Quebec following that sale. Fekete is it's a current property. We just finished drilling there. We have very strong geophysics and a number of gold showings on surface. We drilled 8 holes. The actual program was to do 12 holes, but we ran into problems with early spring, and we had to abandon that property. We'll be moving back out there in a few weeks' time to drill the balance of that program. We're still waiting on drill results, but with results we'll be trenching and drilling there this summer. Laka, this is an older property. We've got 25 holes drilled into it so far. Very nice structure. It's a little bit low grade, but we're looking for a partner on this right now. If nothing else, we'll do some trenching this year to get a better handle on the mineralization controls. This is just a graphic showing where we've drilled. We're drilling this geophysical feature, which is induced polarization, and a very consistent structure. Every time we hit it, it's exactly 50 meters of 2 grams, which is a bit low grade. So what we're hoping to do next is drill deep down here at the 300 to 400 foot level, and hopefully this deposit gets better at depth. I'm running out of time here, so I'm going to skip over that one. This is the project I really want to talk about. We just acquired this in November last year. We moved a drill out there right away. We drilled 7 holes in just under 1,200 meters. We didn't get really high gold values, but we did hit some very interesting geology. This is the potential for this property is primarily for this VMS or gold-rich VMS deposit. So what we'll be doing this year is an airborne survey to resolve some of these massive sulfide lenses that we find on the property. Next slide just kind of shows you what we're hitting in the drill core. That's basically massive sulfide in a quartz matrix. Very, very good type of geology to look for gold. So we've just got this property. We're just getting organized. We'll be doing an airborne survey. With that, we'll be able to pick our drill targets for later in the year. We expect to be drilling there in September, October. Finally, the rare earth space. We like this property a lot. I'm sure you people are familiar with the Quest up in Labrador and Avalon in the Northwest Territories. Those are both very good projects in terms of geology. They're massive, actually. They're huge, big deposits, but they're in the middle of nowhere, and they're going to take a big input of capital to develop infrastructure. What's good about the Kippawa area? The roads are there. There's a hydro generating station. There's a good labor force. It's only 5 hours from Toronto, which is a major market. And there is one company in there called Matamek. They've got a small deposit which they're partnered up with Toyota. It looks like that's going to go into production. It's a small deposit. It'll only last about 2 or 3 years. But what we're working on is developing our properties so to eventually feed that facility that Matamek plans to build. We've got 18 anomalies which have been defined by soil geochemistry, and we'll be working this summer with prospecting and trenching, that sort of thing, to find bedrock sources for these soil anomalies. This is just an example of one of them. You can see it's got a very linear aspect to it. Very high grade in terms of rare earth values, and this will be one of our principal targets. So that's our budget. Our total budget for this year is $1.2 million. This company was involved in a reorganization. We spun out all our Yukon assets to a new vehicle, And we were sort of tied up with that corporate reorganization. So we only spent $350,000 on exploration last year, and we hope to do $1.2 million. So we'll be more than tripling our expenditures. Thanks for your time, and that wraps up the presentation. We do have a booth in the next room, and if you do have any questions, I invite you to stop by the booth and we can discuss these projects in more detail. Thank you.